All right, let's jump right in. Welcome to this explainer. Look, if you've been absolutely banging your head against the wall trying to get funded, you are in the exact right place. Today I'm going to give you the precise framework used by top-tier traders who've collectively pulled in over $4 million in prop firm payouts. Consider me your mentor for this session. We're going to strip away all the noise and focus purely on the raw mechanics of getting funded. And honestly, what's even more important, staying funded.
But first, we got to address a pretty harsh reality. Over 90% of traders fail their prop firm challenges. 90%. And here's the kicker. It's not because they're bad at reading charts, and it's not because their strategy is completely broken. It's because they simply don't treat this like a rule-based game. You see, passing a challenge isn't just about making money. It's about making money without breaching the firm's strict parameters before your edge actually has time to play out. If you treat it like a casino, trust me, the house will always win.
Okay, let's dive into this. We're covering 5 core pillars in our playbook today. 1. Proof of concept and preparation. 2. The mental shift. 3. Mastering the math. 4. The 5 pillars of execution. And finally, number 5, what to do after the pass. This is your exact roadmap from broke to funded.
Starting with Step 1, Proof of Concept and Preparation. Knowing your edge actually works. Listen, before you drop a single dollar of your hard-earned money on a challenge, you need absolute certainty that your system works. Millionaire trader Dan Chong stresses this perfectly. You cannot trade an account without proof of concept. You have to backtest everything. You need at least 12 months of solid data. Why? Because that data tells you what your deepest drawdowns are, your realistic win rate, and the actual mathematical likelihood of you passing. If you just get lucky without a proven edge, you're going to spend years repeating the exact same mistakes. You must know your edge works over a long period of time. So once you've got that proof, choosing the right firm becomes a highly strategic move. You want to look for firms that offer no time limits on their evaluations. Removing that traditional 30-day deadline, that completely eliminates the psychological urge to rush and over-leverage. Plus, if your strategy involves trading around economic events, you have to find specific firms, like Apex or MyFunded Futures, that actually allow high-impact news trading. Always read the fine print before you pay.
And seriously, please use a training ground first. Do not jump straight into a $200,000 challenge. Start with a free trial, or maybe a micro $5,000 account challenge. Because think about it, if you can't execute your rules and pass a $50 trial challenge, you absolutely will not pass a $300,000 one. Prove it to yourself on a small scale, build up that unshakable confidence, and then scale up through Phase 1 and Phase 2.
Which brings us to Pillar 2, the mental shift. Process versus target.
This right here is the psychological hurdle where most people completely fall apart on day one. When you are entirely target-focused, every single loss feels like a massive setback. You start rushing, you start revenge trading, and emotional errors just take over because you're fixated on that finish line. But when you flip that and switch to a process focus, everything changes. Your only goal becomes executing your strategy correctly and following your strict rules. Under a process focus, a losing day where you stuck to all your parameters, that's actually considered a good day. Passing is just the natural byproduct of a perfectly executed process.
There's a great insight on this from Andrew NFX, a trader who manages over $6 million. He says, the right pace is your natural pace. You don't need to be artificially fast, and you don't need to be overly cautious and slow. Since major firms remove those time limits, the only rush is literally inside your own head. Just consistently execute your strategy every single session and let the math do the heavy lifting.
Moving on to Pillar 3, Mastering the Math through Risk Management.
So the crucial point is, prop firms do not want gamblers. They want consistent, calculated traders. Let's anchor all of this abstract psychology to a hard mathematical rule, 0.5%. This is the golden rule of prop firm trading. You should be risking between 0.5% and a maximum of 1% per trade. When you risk small, normal losing streaks, which, let's be honest, are guaranteed to happen, won't kill your account. You survive long enough for your winning edge to eventually play out.
You also need to apply what the pros call dynamic risking. Basically, if you enter a drawdown and take a few losses, you immediately cut your risk in half. This smooths out your equity curve and minimizes the bleeding. On the flip side, if you're at your starting balance or sitting in profit and a rare A-plus setup appears, then you can maintain or slightly increase your risk to 1%. Remember, you get paid to be right on the best setups, not to be hyperactive in the market.
Now you're going to see 2 different paths talked about in the industry.
The conservative path is boring, steady, risking that 0.5 to 1%. And honestly, this is absolutely the safest route for 99% of traders. Then there's the aggressive path, used by some elite traders like Andrew NFX, where they'll risk 3% or 4% to pass in just 1 or 2 trades. But hear me clearly on this. That aggressive route is strictly for highly seasoned, extremely well-capitalized traders who can afford to buy multiple accounts and blow them. For the rest of us, stick to the boring conservative path.
All right, Pillar 4, the 5 pillars of execution. Setting your guardrails.
And this brilliantly illustrates the exact non-negotiable rules you need to ensure you stay within the firm's parameters and keep emotions out of the math. Number 1, know your numbers. Your max daily loss limit is your absolute hard stop for the day. Number 2, limit your trades to a maximum of 3-5 per day to prevent revenge trading. Number 3, trade your window. Find the 3-hour block where you perform best and literally only trade then. Number 4, avoid news landmines. Stay flat 15 minutes before and after high-impact events. And number 5, journal everything. Every winner, every loser, and every single mistake.
I really want to double-click on that 4th rule for a second. News landmines. Unless your strategy is explicitly designed to trade the news using specific buy and sell stops, high-impact news events are absolute account killers. They cause extreme slippage and massive spread blowouts. You could do everything perfectly right, but if you hold a trade during CPI or non-farm payrolls, you could blow your entire challenge in 3 seconds flat. Extreme discipline around the economic calendar is mandatory.
Finally, step 5. After the pass, the transition.
Okay, so you followed the rules, you hit the target, and you passed Phase 1 and Phase 2. Congratulations. Now here is the most counterintuitive advice you will ever receive. Stop trading. Take a massive step back. Overexcitement is a huge trap here. So many traders pass a challenge, get their new login details, feel absolutely invincible, and then obliterate their brand new live account in less than an hour by taking stupid, over-leveraged trades. When you pass, wait a day. Wait a week if you have to. Let the euphoria fade and internalize your success calmly before you ever open your charts again.
Let's move to and see how this builds, because you really must realize there is a massive psychological difference between challenge mode and funded mode. In challenge mode, you're pushing for a specific 8% or 10% goal. You have a defined finish line. But in funded mode, there is no finish line. The game completely changes. The pressure shifts entirely from passing to protecting your capital and sustaining execution indefinitely. If you bring a challenge mode mindset into a funded account, I guarantee you will lose it.
So, I want to leave you with this one provocative final thought. Are you just trading to pass a challenge for that quick dopamine hit, or are you actually trading to get paid and build a real multi-year career? Treat this like a professional, rule-based business. Build your guardrails, fiercely protect your capital, and the payouts, they will inevitably follow. Thanks for joining me on this explainer. Now get out there and build your playbook.